So if you're looking to buy a property, especially for the first time, you might not be sure when should you actually approach the bank. Should you speak to them only when you're casually looking just in case? Or should you start to speak with them when you're serious about buying a property? Or should you contact them only once you've found a property? Well, it all depends on your situation and objectives, and we'll go through all of that today. Hey guys, welcome back. My name is Fyzee, and on this channel we look at all things finance. And today we're asking, when is the ideal time to apply for a home loan? Now, as always guys, we are talking in a general sense only. This is not financial advice. I'm not a financial advisor. Make sure you do your own research to see if it's the right thing for you. So when looking at when is the right time to actually apply for a home loan, you need to first understand the implications of actually applying, and then you can make your decision. So let's go through that. Generally speaking, let's say that you're looking for a property and you apply for a home loan and the bank takes its time and then you get pre-approved. That approval will usually last for 3 months. So you've got 3 months to find a property, sign a contract, and get this contract to the bank so they can firstly do a valuation of your property to make sure everything is all good. And then secondly, they can read the contract as well to give you the final approval. So knowing this, you need to first think about where you are currently in your property hunting journey, and think about if you were to be pre-approved tomorrow and you had 3 months to find your house, apartment, or whatever it is, could you realistically do that? Have you done enough research into the area that you want to buy in? Do you even know what the main suburbs you're actually looking at? Do you know the rough price range, the bedrooms, bathrooms, and other must-haves? If you're buying a property jointly with someone, are they on the same boat as you? Now guys, if you can comfortably answer these questions or answer most of them, or you've started thinking about what it is that you actually want, it may be a good time, because that'll mean that you can fit everything in 3 months. But if you can't, then it might mean that you're not fully ready at the moment, and you need to think these things before applying and only do it once you're ready. By the way, if you are seriously thinking of applying, I made a video recently which goes into the top 3 things that you need to get in order before actually applying. Now this is not an exhaustive list, but it definitely helps to increase the chances of approval, so go check it out. There's a link in description, and there should also be a pop-up on your screen as well. Now let's look at another example. Let's say that you know everything about what you want. You know the property type, the features, the suburbs that you want to look into, but for whatever reason, you just don't want to start looking for property just yet. You might be busy with something or whatever it is, but at the same time, you want to know that the house that you're looking at and the loan against it is something that the banks will be able to lend to, or you might just want to be sure that you can actually borrow that much. For example, if you have enough borrowing power. So it might seem like common sense to approach your bank or your broker to get a pre-approval, because at least that way you'll know if you can borrow that much. Now that may be fine, but consider this. Every single time that you apply for a loan, the bank does a credit check. Now, if you apply too many times, it can actually start to affect your credit score in a negative way. And why does that happen? Because to the credit bureaus, it starts to look like desperation, and it might seem that you're not getting approved anywhere else, which is why you keep applying at different places. Not to mention, the bank that you go for will usually ask you about your credit inquiries for the last 2 years at least, and they'll also want to know why you kept applying at those different places and what your intentions are. So just keep that in mind, because every single inquiry you make actually stays on your credit file for 5 years. So you want to be careful as to how frequently you speak with banks and lenders. By the way, I've actually made an in-depth video about credit scores, credit files, and all of that in Australia, plus some tips on how to actually improve your credit score. So if that interests you, there's a link in description, and there should be a pop-up on your screen as well. So go check it out. I think it'll help you. So basically speaking, if you're not that serious about property and you're still deciding and just want to know your maximum borrowing power instead of applying every single time, it could be good to just go through a broker. The reason being is because these guys do have a lot of access to banks, and not just that, but they can also check your scenario with these banks. Plus they can check your borrowing power against the bank's calculators and work out exactly how much you can borrow. Plus the service from the brokers is completely free to you as the borrower. And the other thing that's free is also hitting the like button on this video or subscribing to stay up to date, because that could be helpful as well. So going through a broker does a few things. First of all, it saves your credit report from being accessed by the banks. It saves you time since the broker is doing all the work for you. Plus you can spend time thinking about the actual important stuff, which is the property that you're looking to buy. Now I just want to go back to the point that I made earlier about pre-approvals expiring. If it takes you longer than 3 months to find a property and the pre-approval expires, you generally have to make another application with the same bank, which means that you need to provide updated payslips, information, bank statements, which could be a hassle. So generally speaking, if you're undecided on what you need to do, applying for a pre-approval might not be the best option. In another situation, let's say that you're going to an auction and you plan to bid and you're pretty serious, then it's almost a must to have a pre-approval in place to protect yourself, just in case you actually win the auction. Now, if you've got a solid income and your financial position is quite good, then it might be fine, but generally speaking, it is recommended to get a pre-approval before auction. Now guys, let's look at one final example. If you sign a contract of sale, then usually there is a finance date on the contract. Now, generally speaking, if you already have a pre-approval in place, it will be much easier for the banks to quickly approve the loan, compared to if you start searching for the bank for the first time after you've signed the contract and do a fresh application. In that case, the bank will have to go through everything and they might also ask questions, and basically speaking, there might be a lot of back and forth, which ultimately will be very stressful for you as a customer because of the deadline. Whereas if you are already pre-approved, all those questions will have been already asked by the bank and you would have already answered them. Therefore, once you actually find the property, all they need to do is just do a valuation on the property, make sure they can check the valuation report, and they can also review the contract. So for them and you, it'll be much more quicker and a much less stressful outcome for you. Now, stepping away from purchasing a house, what if you're actually thinking of refinancing? When should you apply for a loan? Well guys, this is going to depend on quite a lot of things, but generally speaking, it is only worth doing if there is financial benefit to you as the customer. For example, with the bank that you're considering to move to, if they are giving you a significantly low rate, or if there is cashback involved or even lower fees, then it's financially viable. Otherwise, it's not really a good decision financially. Once again, to work out the benefit, you can do the calculations yourself to see if you're better off, or you can speak with a broker. These guys basically do this on a regular basis. Now, since I've worked as a broker, I'm speaking from experience. Also keep in mind that the bank that you're looking to refinance to wants to make sure that you have stayed with your current bank for at least 12 months usually. But sometimes you may even get away with lower than 12 months. Now this stuff is pretty situational, so make sure you get some advice from your broker. So I hope this video was helpful guys. Once again, if you want to learn more about everything to do with your credit scores, or if you're a first home buyer and you're applying for a loan for the very first time, what sort of stuff that you should get in order, then click the link in description, or those videos should be popping up right about now. And I genuinely think that can help you out. Thanks for watching guys, please like and subscribe, it really helps out, and I'll see you in the next one. Instead of applying